Hello, hello,
Hello,
Andy.
hello.
How you doing?
Oh, doing good. Hey, Jamie. Hey, Scott.
Hey.
Happy Monday to everybody.
Yeah, you too.
Even though we're living in what used to be called California, but you might be able to call it Seattle these days. Um, but the sunshine is going to come out this weekend, so hopefully another couple of days, eh, Scott?
Yeah, hopefully.
All right. Well, let's get on to the fun stuff. And before we get to this fun stuff, want to take a minute to make the lawyers not cringe. So just want to make everybody aware. And number one, thanks for coming out to join Andy and Scott and myself today. I just want to make sure everybody understands that we are a provider of information here, and what we share with you here today, strictly for educational purposes. So if you do need investment advice of any type, please seek out a registered person that is geared up for that, and you can find registered individuals all over the place. Lots of different firms out there would be more than happy to answer your investment questions and give you investment advice, but everything that we share with you here today, strictly for educational purposes. Now, before we get on to the itinerary and what we're going to speak about today, just want to make sure, especially since we've got a majority of non-subscribers in the room today, that not only do we have flagship technology, the best scanner out there for the markets, along with our advanced artificial intelligence as well, but we've also created a community around the technology to try and make it easier for people to learn how to use and interact with the technology. We've got a free trading room hosted by Barry Anderson every day, as long as the market is open. That's free whether you are a subscriber or not. So if you haven't been taking advantage of that, you definitely want to try it out. Barry does a great job in there. Of course, today is Monday. It's typically myself along with Steve Gomez. Steve's taking the day off today. Go spend some of that money that he's been making. And I've got Andy riding shotgun with me here today. Then tomorrow, Steve will be back with us, and Andy typically rides shotgun with him. Then on Wednesdays, we've got Brad and Dan Merkin, which is always entertaining with the Q&A demo. And then we round out the week again with Andy on the trading studio, and I typically ride shotgun with him. And because we're nice guys, we give you Fridays off. All right, so before I get into this stuff that you see on the screen here, Andy,
Alrighty.
how about I pass it over to you and you tell us about, hey, the SPY perked its head up for a little bit today,
Yeah.
but kind of shimmied on back down. So let me pass this over to you, Andy. Why don't you give us your 2 cents on the overall averages
Alrighty.
before we
Yeah.
progress?
There's not a whole lot to talk about. We're not far from where I spoke to you guys last on for the ones that joined our last Thursday webinar. I mean, the spiders are just very resilient. I mean, they won't even pull back. I mean, it's kind of like the action you saw over here when the spiders had a really nice, the overall market in general had a really nice move, and a lot of bears were hoping, or people wanting to get long the markets, hoping for a bigger pullback than what we saw. When we mentioned in here, it's just another sign of strength. Anytime you get a big move followed by sideways action, that is just an incredible a sign of buyers in the market, or if you're going down, I guess it could be sellers in the market. Well, we might be seeing the same thing develop right here. We've had a nice push right here and kind of some sideways action, and we looked like we were going to maybe take off today. Didn't get very far, but nonetheless, the bears, they have nothing right now. It's like I said, there's not much to talk about, guys. It's just it's not even something you can kind of build a possible pattern on, because there's no resistance. Okay, you have to have prices obviously back in your chart to have resistance. There's no resistance, so let's just wait and see. I know people are hoping for a pullback. We'll see what happens. Diamonds, pretty much the same pattern there. Even IWM looked like it was showing some weakness last week, but lo and behold, on Friday it reversed the last 2 days, and actually IWM, some money going
Right.
more into the small cap today. Did you notice that?
Yep. So they're all getting
Yep.
drugged back up to
Yep.
the upper ranges, which course, that's no guarantee, but it's kind of like a prime. It's priming for a move higher. Do we get it? We'll just
Yeah.
have to wait and see.
Yeah. So I don't think there's too much more. Like I said, we're not going to spend a whole lot of time. Q's the same way. I don't even think we should try to venture on a possible pullback and where it's going to come till maybe we start to get it. And thankfully we have 4 webinars a week, so we'll probably more than likely have one on the pullback. So Jamie, yeah, I mean, I'm not going to ramble on because it's the same old record here. So if you want to take it back, I know you had some interesting stuff to show them today.
Right, and along that same vein of thinking, well, here's the picture. There's really not a lot of complex things going on with the picture that is the chart. So, it is what it is. It's now we're in the observation mode, uncharted territory, no pun intended, so to speak. Very exciting because, we can have good upside and we can have good downside on any day, right?
Mm-hmm.
So, and of course, I'll get into that into greater detail here in a little bit. But just looking, for the most part of the day, we had less than a 1-point range. Opportunities were harder to find today. A lot of my opening metrics told me this in the first 15, 20, 30 minutes on the compare counts that I watched. Basically, of course, we can see the day forming, and we can see how tight the range is. But when we have all these other metrics telling us the same thing, well, of course, there are no guarantees ever, but that does give us realistic expectations. And those expectations that were derived first 15, 20, 30 minutes of the market today pretty much set the course. All right, and we'll get into more detail on that in just a second. Holly, very light day for her to see the statistical model. Only issue, what do we have? I think 7 trades total. Not a big surprise either, along with the performance that she turned in. So let me just minimize this guy for now. And I've got the strategy panel pulled up here. So obviously, if you've been watching Holly for a while, you've probably noticed this already. For those of you who might just be seeing this for the first time, this is the Holly strategy panel where all of the strategies show up that will be used for trading in the session today. Now, of course, we've been seeing a pretty good collection of strategies on a daily basis. Anywhere from 10 to 14 strategies have been showing up typically. Now, just because a strategy shows up doesn't necessarily mean it's going to trade, but we did have, a bit fewer strategies in the hopper today, so we only had a total of 6 strategies make the cut after all of the analysis was done after the close on Friday, which is considerably a bit less. So we had 5 longs and we had 1 short here, and of course on the trade count today, a whopping 7 trades that we can see right here, 3, 2, and 2. So 7 trades total for Holly today. And the interesting thing to point out is that, 1 and 1, they both won 100%. This guy underperformed, lost 2 out of 2 for 0% wins today. And this guy overperformed slightly. So after it was all said and done, risk off for Holly down 27 cents on 7 trades. And if we were just buying and holding everything to the close, would have been down close to a point, not quite a point, 98 cents on 7 positions. So all in all, with what we have in the markets in this little tight range day up here, to see Holly only spit out 7 trades and perform to the tune of down 27 cents, completely within expectations. Now, before I forget, for those of you who are seeing Holly for the very first time here, we're seeing Holly on not a very active day, so I do want to give you guys a general idea of how this statistical model has been performing since inception, which is just a little over a year ago. January 1, 2016 is when Holly first came online. So here we are a little over a year into the game, and we can see Holly's been taking a little pullback over the past few sessions, but that gap between the S&P is nice and wide. So just like any statistical model or any trading system, lots and lots of gains in the past. While the market digests up here, we're taking some small losing days, and we'll see what happens tomorrow. So now onto the trades that Holly spit out today. We can see all of the trades down here, and we can either sort by risk on, which is the flavor of the day today, or risk on. Usually we have a lot more examples to point out to people. We like to try to teach everybody how to interact with Holly when the signals come out. But just not a whole lot to work with today, so this will be a short and sweet process here. So I'm going to kill the All Trades panel here just so everybody knows how to get there. So if we have the trade strategy panel open, which is the main AI window, and we want to get to all the individual trades, we right-click and we say View all the trades. And of course, when we're watching Holly in the actual market session, we want to make sure that we have both of these windows pulled up at all times so we can see the action as it happens in real time. So we've got a couple of different types of things that we typically look for with Holly. When Holly spits out a signal, a lot of the times they just work immediately, and there's not a lot of time to kind of interact with that trade. Other times, they'll pass through that signal point maybe 1, 2, 3 times, or kind of hug that signal line before they do what we think they're going to do. Then other times, Holly loses on a trade and gets a stop out. There are actually 5 reasons why Holly can get out of a trade. And we're always going to be able to see the exit reason by referencing this column here. So on this HCN trade, I'm going to go ahead and double click on it. We can see that when I double click on it, it automatically populates our charts with all of the metrics that you need to be aware of. Number 1 is the entry price. So not only will the blue arrow be in the exact bar, and these are 5-minute bars here, where Holly called the buy signal for HCN, but the blue box will correspond with the entry price of 69.77, which you see right here. Now, it's also going to populate the chart with our stop loss. So the red box is going to be the stop loss that we would use in case we're wrong. So 69.39, just drew a little line for easy reference here. And we can see Holly got out on a profit save function. Now, quick history lesson here. When we brought Holly online for the first time, we had 3 reasons why she would get out of a trade. Stop loss was hit, profit target was hit, or the timed hold had expired. And what I mean by a timed hold is that each and every one of these strategies here is designed around a certain intraday hold time. So we can see on support, 60 minutes. So profit save was developed shortly after we brought Holly online to prevent her from letting a winner turn into a loser. You know, just keep in mind, if we had stop loss and profit target and timed hold, it could be up 50 cents. Neither the stop loss or the profit target had been hit. Timed hold still in effect, so all of a sudden a 50-cent winner goes down, turns into a 25-cent loser. Timed hold kicks in, Holly takes her loss. So we quickly realized, you know, we can't have a model that lets winners turn into losers. Enter profit save functionality and reduce risk functionality. If a trade is not working and things are getting a little volatile, or what we might call wicky on the charts, you know, like this is a wick up here, meaning a fast move up and then right back down again. So Holly will also exercise getting out at a loser before it hits her stop loss. So all in all, there are 5 reasons why Holly can get out. So on this one, here's the nice entry here. Doesn't get any prettier. And the trade just immediately starts going our way. Now typically I've got a exit time column, so why don't we just add that up there. And we can see on the HCN trade, Holly goes in at 9:18, gets out sometime later at 9:56, and gets out because she feels it's appropriate. So she books 13 cents on that trade. as we can see on risk off, which leads me to a good point here. Differentiating between risk off and risk on, notice that we can click here and pivot between risk off and risk on. For the people that are seeing this for the very first time, the game is not such that you have to pick risk off or risk on and go, okay, I'm going to go with risk off or risk on at the beginning of the session. We can approach that from a trade-by-trade basis. And an example of that is this HCN. So Holly gets out in the 956 bar, which is about 55 through 56. So if we just put an arrow right here, Holly gets in here, gets out here for 13 cents. That's risk off. Now, if we're in the trade with Holly here, let's say we're in a couple hundred shares for easy math. We get the move up here, and we're thinking to ourselves, well, I see Holly's exiting the trade here, but I feel that, you know, as long as I exercise proper risk management, still adhere to my stop losses, maybe I see Holly getting back out, and I tell myself, okay, I'm in 200 here. I'm going to go ahead and peel out of 100 with Holly on risk off, but I'm going to keep that other 100 and give it a risk back down to flat, or maybe just to where I lose a few pennies if I'm wrong. That way I make money on the first half at least. But you can see here, if we would have kept that other 100 shares, we would have had, at the top here, a chance to exit for a lot more potential. You know, this value here is reflecting if we would have held to the close, we'd be up 26 cents. We could have clipped a little bit more out here, you know, as a high. But the bottom line is, risk on is just showing us what would happen if we piled into all these positions and simply held them to the close. So, you know, that can be a little bit scary, but let me help try to dispel some of the fear here. If we would have just blindly piled into all of these trades with Holly today, we would have been in 7 100 per share positions, and we can see if we would have held those positions all the way to the close, we'd be down slightly less than $100, and would have even had a time at one point in the day to exit for a profit, right? And of course, Andy, you know this as well as I do, these charts typically look a lot different. You know, Holly's taking her little breathe time, where we're seeing a lot more red than green, but typically it's the inverse, you know, and we can see here with the risk off, draw down, back to profitability, back down to flat, back up to profitability, and then finally back down to flat and then down again. This is a perfect example of how the AI can feed you additional useful information, what we like to call the canary in the coal mine. Number one, this is a very advanced model. You see the end result every day for the next session. So tomorrow morning when we see the new bevy of strategies queued up, we'll be like, well, okay, we took today's market data, Holly did all of her heavy lifting and number crunching and came up with a new set of strategies. However, I make that sound easy. And I just want to try to give everybody an appreciation for what is actually going on behind the scenes, because this little bevy of strategies that showed up today is only part of a base of 45 strategies, which right now all the market data, all the tick data for every stock is being fed into our database. And when that's done, Holly's going to go through all 45 strategies, backtest them, try to improve upon them based on the new influx of data today. And after that's all said and done, only the strategies that meet the minimum on our proprietary scoring system will make the cut tomorrow. Now, it sounds simple, but believe me, ladies and gentlemen, there's a lot of heavy lifting going on behind the scenes, so much in fact that usually those calculations don't even finish until about 2 hours before the open. You know, that's how long those calculations are taking. So from a user of the product and a teacher of the product, and I interact with the markets on a daily basis, you know, we're really taking all the hard work out of it for you, because each and every day this model will deliver to you entries that are statistically weighted, right? We can see what the statistical weight is of every strategy coming into the session today. Now, even better, there's nobody else out here really doing this. You're going to have little niches of people But all in all, if you took a poll of, say, 100 traders and you said, how are you applying statistical probability to your trading routine, you'd probably get a lot of blank stares. But it is the most logical scientific approach to the markets because we're using statistics and we know that they are by no means a guarantee, but it's the closest thing that we can have for reasonable prediction of future sessions. All right, so once again, not a whole lot to select for trade examples today. You know, we can see on CTRN, one of the more thinly traded stocks today, Holly got out once again on a time stop and made 6 cents. Had she stayed in, would have been down 5. CM, another good exit, only made 12 cents, but that beats losing 20 cents. And as far as the ones that get stopped out today, it seems like they're pretty much keeping us out of trouble, doing what they're intended to do. So Andy, any comments over there on the Holly performance today?
No, you know what? It doesn't surprise me because that she did not find a whole lot of opportunity out there. It was very, even though we creeped higher today, it was very lethargic, lackadaisical, I don't know, trading. I even looked at the spiders, you know, they only did like 56 million shares a day. That's like about almost half of what they did on Friday. So and Friday's usually a lower volume day. Yeah, so I don't know if it's the market getting tired or what's going on, but yeah, it was very kind of uneventful today in the market and as well with Holly. So the strategies were there, and it's interesting, Jamie, that she didn't have a whole lot of strategies today. It's like you know, she could see in the back testing or something that there's just not a whole lot of edge out there right now. But
absolutely, and you know, I see Matthew asking a question about how the Holly profit is calculated, the 27 cents. So Matthew, if we look at the risk-off column today, that negative 27 cents is just the sum of everything that you see here, right? Yep. So, you know, 27 cents, if we were hitting every trade and for 100 shares and getting the exact same prices as Holly did today, we've been on $27 basically.
Yep. That's right.
Okay. So that's about it for Holly today. It's going to be interesting to see what transpires tomorrow. Now, keeping on the same vein about what kind of trading day it was, right? Kind of a lackluster range, whether it was Twitter or the people that I communicate with on Skype on a daily basis. I was hearing the same old thing, you know. Well, got my stops in, not taking any more positions. The day's just not, you know, the animals that everybody hunts just, they were staying in today, you know. Maybe they're in California, maybe it's raining, maybe everybody's staying home, but the things that most people like to hunt in the market just were few and far between today. But it's an excellent example on how a day like today can be very eye-opening if you're watching the right windows. So let's do this real quick here. What we're going to talk about next is on a day like today, it's even more and more important to kind of go back to the basics, all right? Number one, if you're watching the compare account window, which I'll kind of show everybody, give them a little peek of that, that's going to help us adjust our expectations for the day. You know, if it's a low volume day like today and you're just out there swinging for the fence on every trade, you're going to get very tired and you're not going to have good results, and that's not good for our mental condition, especially as traders. So really, it's always about volume and price action. Where is the party? The party is where the volume is. It's where the volume is. It's where the price action is. That's really all that matters, volume and price action. So on a day like today, where was the party? And by the way, before I get into these windows, the party is here every day. It's just more noticeable on a day like today. And so without further ado, let me kind of give a little bit of explanation as to what these windows are looking for. And before we get into the nitty-gritty of the filter set, I'll tell you this. Basically everything that comes through here I could say most of, but not all of, and most of everything that comes through here, but not all of. Institutional buying out of this window, institutional selling. Now, Jamie, what is institutional selling? Well, it's synonymous with heavy selling. Institutional buying, heavy volume in general. And when I talk about heavy volume, a lot of different people put different spins on what is good volume, what is heavy volume. Heavy volume to me is a stock that's going to finish today trading at least 2 times the amount of shares as it normally does. The higher the better, right? So a lot of people out there, when it comes to setting up a filter set, will set up things like minimum maximum price. We'll throw some average daily volume in there because, well, we have to have that, right? Because otherwise we'll have all these thinly traded stocks coming through. We don't like those and so forth and so on. Well, when we go in here and take a peek at the configuration for the upside, we're going to notice one thing. And by the way, if there are those of you out there who have heard this already, good, because it's always good to hear it again. We say in these webinars a lot, first it was Holly, who just finished off before she posted a couple of these small losing days. She made money 17 days in a row. That's quite a run. And we've had different windows and different techniques that we've shared with the webinar audiences in the past year. And, it's just like everything else that we show. They all got a limited lifespan. The one guarantee is whatever you have that's working, it's going to stop working. Now, with a statistical model, that's a little bit different because we're rerunning things every day. But if we had put together a strategy that back-tested well and we just left it alone, and we got 2 weeks out of it, then we have to go back and change it. So that's the difference between manually adjusting and having Holly do it, because she's readjusting every single day. But when we look at a filter set such as this, number one, you're going to notice I don't have any minimum maximum price. Now, we could cap it if you don't like some of the higher dollar ones coming through. I've got my earnings filters in place here, not because I really care if a company is making a penny or losing a penny, but I'm by de facto weeding out all the ETFs and iShares because they do not make or lose money. So see, that's a nice little workaround. Instead of having to point to a custom list, keep it maintained, so forth and so on. Now, to take care of the volume aspects, I'm simply mandating minimum market cap of $5.4 billion. That's with a B. Now, of course, keep in mind, you can always take this down to 4, 3, whatever floats your boat. This one was designed with high caps in mind. That's why I started with 5.4 billion. And lastly, we're looking for. Yes.
I just wanted to ask you, was that an arbitrary number, the 5.4, or is that something that actually defines a high cap?
Good question. Good question. And 5.4 billion is the magic number. That's the minimum market cap that you have to have in order to be in the S&P 500. But just because you have a $5.4 billion market cap does not automatically include you.
Okay.
Right. But that's just the minimum market cap to be considered part of the S&P.
Got it.
So, in other words, the goal was to have highly liquid stocks on the move that we can interact with.
Sure.
Now, this last little piece of the puzzle, and by the way, 1 minute time frame is the smallest that we look at Trade Ideas. This is a ratio filter, so a 100% value would be normal volume for that time frame. I am mandating 3 times normal or higher. That ensures the volume is there. And so, if I were to show the history here, and if we just started scrolling through these symbols, maybe you guys recognize some of these symbols. Maybe you even traded them today. All right? But there were quite a few coming through here today. How many, you might ask? Well, I will show you. So today, you can see these 2 lists that I created. 227 up, 227 down. Well, lo and behold, there were about a little over twice as many coming through the upside ticker versus the downside ticker. Now, let's kind of revisit what was the action like most of the day up until this point right here, where we broke out and went a little bit higher on the SPY, right? So most of the day we're doing this, up and down. We come up here, then we cycle back down. So, just kind of an inchworm pattern until late in the day with about, an hour and 25 minutes left. We finally poke up and then just basically live on the other side of that range for a little bit. So once again, kind of lackluster action. But what I've done here, if these were all the institutional stocks, or the majority of the institutional stocks today that were going up, and this guy was telling me about all the ones with heavy selling, did they pretty much do it all day? Because we all know stock might be down, but then it can turn and burn if, if all the selling has been dealt with. So we've got these nice options within the program. Anytime you want to import all this symbol activity, we can right-click and just say Save Contents. So what I did is I saved the contents of both of these guys, which is going to archive all the symbols for me. And then I created these custom lists here. Now, here is the kicker, right? What I've done is I took all the stocks, took that list that I generated from here, and I pointed this window only to that list. So we pop into Configure, we go to Symbol List. It's only looking at all of the symbols that this guy produced today. Now, as you can see in this list, I've got quite a few metrics that I'm viewing up here. This is the position and range. This is where the stock closed for the day. Let me just resort that one more time. Okay, so now we're looking at where all of these stocks closed today. Notice these guys closed at highs at the very top. If I started clicking through these guys, upside bias all day, closed at highs. This guy closed at highs and is even looking really nice on the long term as well. That's why this bar is all green, right? But out of 130 something stocks that you would have been made aware of by watching this window right here, big cap movers, not one of these guys, well, I take that back. Out of all those stocks, only these guys down here didn't follow through and finish positive or at highs. So if you were looking for the path of least resistance today, this was definitely it. Can't say it's the least path, but it's one of the ones that if you were watching this ticker, you had dozens and dozens, 130 something to be exact, of stocks that were going up and that finished the day green, if not at the higher 3/4 of their range today. Now, if we try to figure out why that happened, it's simple. That's where the institutions were playing today. All of these stocks were being heavily acquired by institutions. Most of, but not all of. Now, if that holds true, what about all the stocks that came through here today? Did they finish down, just like the opposite of what we see over here, or did they hit bottoms and turn? Well, did the same thing with this guy. Pointed that downside list to this guy so we can see. Looks almost like the mirror opposite of what we saw on the upside ones. So you see, on a day like today where it was kind of hard to figure out where the markets were until the very end of the day, these guys were spitting out very quality plays. Not only were these guys hitting lows today, but all of the guys, all but two down here, finished negative and very close to their lows. So, I hate to oversimplify things, Andy, but it has its place. If you were a short seller trying to find stocks that went down today, you did very well by taking plays from this window. If you're a long guy, you did very well from taking plays from this window, and if you like to do both, which is always the best, I mean, you had follow through over here like nobody's business and follow through over here like nobody's business.
Yeah.
And they were all very thick, liquid names, all right?
It's very
So,
true, Jamie.
you know, I
And
had had a training session with some guys over in Italy today, and of course, they saw my Mona Lisa background. We started talking about Leonardo da Vinci, and that really is what a lot of this is based around: simplicity and things that actually make sense, right? The beauty is in the simplicity. And by the way, ladies and gentlemen, I will drop these two windows into the chat area before the webinar is done so that you can load up the cloud links, start watching these guys on your own desktop, some real high quality information streams to keep your eyes on.
I'd like to add something too, Jamie, to this, because when you're talking about a market cap of 5.4 billion, a 300% increase in volume is huge. I mean, that tells you something is going on there. And for those, I know because I do a lot of sessions, and so does Jamie, people who liked to look for some different style of trading besides trading the low float kind of obscure stocks. Trust me, that game is great too if you're good at it. But if you want to slow things down, you're looking to swing trade more. Something what Jamie is about to share with you here can really help you focus on stuff that's seeing some action, seeing some volume coming into it. And then, of course, you can use your own chart reading ability to decipher, what you want to trade or, things you want to buy, maybe hold for a couple of days. But this is it's a nice little tool to find out, where this could be a sign of like where the big money's going. Because let's face it, what was the one running today, HTBX or something like that? The mutual funds and the big fund managers aren't fishing around for those $2 stocks. Like I said, nothing against those because I've played them a good portion of my life, but this is the kind of stuff that you might want to, if you're looking to buy and hold and doing some swing trading, maybe doing something with a little bit more liquidity to it.
Right, and hey, I'm glad you brought that up because it's really easy to modify these windows. If we want to take this one, we could right-click and say duplicate. And if we want to have a different set for the lower caps, we just come in here and change the market cap. Let's cap it out at 4 billion or 3 billion or make the minimum 3 or 4 billion. You can always bring more things in if that's what you need to do. It's a lot easier to loosen things up than to try to constantly tighten them down.
Exactly. And you can take what I'm about to show you here, just give you a brief shot. I mean, you could take windows like this, and you can go into the filter part of it, and you can use those position and ranges that I've talked about, and you construct these beautiful images in your head of a chart pattern where you'd like to be alerted if the stock hits that, and you can still use volume filters with it. And that's the beauty about the software. If you can picture a chart in your head, you can pretty much build it and into an alert or a top list. This is an alert, but there's plenty of them that we build that are basically a top list that does not have an event, does not have an alert, but it has filters that will notify you on the stocks that are satisfying your filters.
Right, and this is what this list for the upside looked like at the close, and we can see all these guys have a little bit of gap here, which means they closed close to their high. But not at their high. And then, for example, this little guy right here, based on this little pattern right here and how it broke out at the close and now it's trading up just a smidge in the aftermarket, maybe that's a good one to keep an eye on for the next day. If we look at the daily here and try to decipher whether or not it has room, which, maybe this guy does, all the way up to here or maybe even
almost 16. Yeah, looks like it almost has a free shot to 16 if it can take out, the Mars highs and.
Yeah. So you see, ladies and gentlemen, you can use this list for end-of-day scanning as well. It can prove very valuable during the actual market session, and then end-of-day scanning as well.
Absolutely, Jamie. Good stuff.
Okay. So I see a question that came through. At what time was this list made? All right. Now, this list, we're looking back in retrospect just to show you, had you been paying attention, had you been fishing in this pond, you probably would have done pretty well today if you were on the long side, obviously. The lists were created after the fact to show everybody, look, indeed, these stocks have the potential to go up, and look how they finished the day, right? So that's why I was making the list to show everybody, you know, it's not just me saying that really good long opportunities come through here or really decent short opportunities. It's the results that count. And seeing where those stocks finished on the day is showing you the results, if that makes sense.
Mm-hmm. And what I like to do with alerts like this, guys, when Jamie's going to drop them in there, and you copy them and you get them, and what you can do, because every time I build an alert, the first thing I do is I go to the history of today. Then what I do, I scroll back to the early morning, and see what alerts were coming through there, 15, 20 minutes after the market opened. 30 minutes after the market open. And then, and what's great about our alerts, if Jamie will click on one of them there, it shows you an arrow of where, it went off on the chart. So Jamie shows, of course, this is later in the day because that's the last print.
Let me scroll back to when the market was actually.
Yeah. He can scroll back to, and I do, every time I build an alert, this is what I do. I go back and, of course, he's going to have a lot of data, but.
Yeah, we'll just go look and see, with an hour to go, right?
Okay.
Okay. So with an hour to go.
All right, there's the alert right there, right as it went through highs.
And see, this is a great example of why I love this window right here, because you see that range break that's occurring right there?
Yep, exactly.
It can't get out of there without hitting a new high. A lot of people ask, why do you use the new high? For this specific reason, because it can't get out of that range unless it hits a new high. And if you can catch it right here, as that move is happening and that humongous volume, and by the way, we can see what the volume level was here on the 1 minute time frame. I'm mandating 3 times normal, but when it was cracking through there, it was over 4. My goodness, look at Amgen on its late day runs. As it's busting out of its range right there,
look at that.
11 times normal 1 minute volume.
11,000. Yeah.
Well, yeah, that's 1,100, so we divide by 100.
1,100. I'm sorry, 1,100. Yes.
Yeah. But the bottom line is this: these guys have a much higher chance, from a statistical standpoint, of doing this versus coming up here, popping a new high, everybody's happy, and then whoosh, they fall right back down into the range. Because the volume's not there, It's a simple methodology, but a very potent one. So let me get these windows popped into.
Oh yeah, for sure.
Real quick for the window. And Andy, I want to check the time here. I know you had another window about the swing trading, but we're a little bit pushed for time here.
Yeah. That's fine. You know what? I just started this today. So what I'm going to do, guys, I am actually going to work on it some more. In this way, I can kind of help optimize it and get it better for Thursday. And I will present this to you from Thursday. It's more of a swing trading alert that I will share with people. And yeah, so far, like I said, I just started it. Didn't have a whole lot of time today because I was very busy, but I wanted I definitely want to sweeten it up a little bit before I present it to you guys. So what I'll do is on Thursday I will have that in the coffer for us, and I will work on it some more and get it nice and right for you guys. Meanwhile, Jamie is going to be dropping those in. He dropped one of them in there already. The upside, it looks like he dropped first. The turbo breaks up.
Yep, we got both of them in there now, and
okay.
Load up those cloud links, copy, load them up. Should pop up no problem for you. By all means, duplicate them, mess with the market cap, see which one you prefer. But, I think you guys, if you start watching these windows, it can only lead to good things.
Yeah.
So, Scott, if you are waiting in the wings, we're ready to hear what you have to say and
yeah, thank you.
talk about all these nice discount codes and whatnot.
Yeah, well, a couple things. First, just want to make sure everyone's aware we have a podcast now, and it's real easy to find. Just search for Trade Ideas Podcast in any of your podcast players. So you should be able to find it whatever you use on your phone or on your tablet or on your computer to listen to podcasts. Also, keep an eye out in your email. We do announce when there's a new upload. They come out on Fridays. And for example, this last Friday's went out about Friday around 2:30 p.m. Pacific time. So go ahead and subscribe to that, and you will get some fresh content straight from our team into your ears over the weekend. So we also have a promotional code today for the webinar, and that is Pro Holly. It's all caps, and just like you're going to see it on the next slide when Jamie forwards to that. And it gives 15% in instant savings off your first month or year of Trade Ideas Premium or Standard. And even Trade Ideas Standard includes a full hour of one-on-one training. So either Premium or Standard includes an hour to get started. Just go ahead and go directly to support and training after you sign up to get your best time and date that's available with one of our trainers. It could be Jamie or Andy or Steve, and you do have a choice. So you can pick whoever's available or pick your favorite. You can email us with any questions at info@trade-ideas.com. And I've also popped some of the information from these slides into a handout in your handouts panel. So if you click on the little plus where it says handouts on your GoToWebinar interface and download that PDF, you also get this contact information, our promo code, and information about the podcast just right there for you to save to your desktop. So you can follow Steve Gomez at Trade Ideas One, follow Jamie Hodge at QuantBot, or follow Steve Gomez at Today Trader. You can find us on Facebook at facebook.com/tradeideiaspro and like us there. That way we'll show up on your streams and you can share us when we post some original content there. Also, you reach out to us by email. You can get to Jamie or Steve or Andy. Jamie is jhodge at, Steve is Steve at, Andy is Andy at. Everyone's at tradeIdeas.com. However, if you have a question for support, you're going to want to email that to info@trade-ideas.com. And if you have a subscription billing thing, you can call our number during normal business hours on the West Coast. Thanks, guys. I'll go ahead and get this recording converted and uploaded tonight, and I'll send an email out to the registrars tomorrow around this time with a link to where to find it. Thanks, guys.
Thank you, guys. Appreciate it.
Hey, thanks everybody. Thank you, Scott. Thanks, Andy. We will see you in the trenches tomorrow.
Yep. Bye, guys.